Today, our bot hit for NIO as a buy signal, and I entered a position. So what I want to do in this video is explain why this is considered a buy signal, why our criteria is set the way that it is, and ultimately why I think this is going to be a really solid trade. So hit the like button, subscribe, check out our Discord community down below. It's completely free. You get access to free courses, free live streams, free seminars, free webinars, as well as our free Tesla bot. And if you want access to all of our bots and all of my trades specifically, you can do so by going over there to the free Discord, hitting the upgrade button, and you can upgrade for only $1 per day. It is so cheap and affordable, but just not going to give it away for free because then it doesn't mean anything to people and you won't take your trading seriously, which is not what I want. So let's look at NIO. You can see right here, bot entry whiskey, which is our it's just a good name for a bot. This is our entry for NIO, and we're going to go over exactly why we ended up doing this. So let's look at our strategy tester and let's explain what we're looking for here. So our entry requirement, which you'll have to excuse me, I'm sorry, but our entry requirement is that the RSI breaks over 50, a constant value of 50. So we want to see the RSI, which we have right now, push over 50 and hold a constant value of 50. That is our only entry requirement. Geez, everyone's hitting me up. That's our only entry requirement that we have right now. Our exit requirement, however, is two things. Number one, if the 11 crosses down through the 22, we exit. And then the other example is if we were to wait until 5 candles, and if we're not up by 2%, then we walk away from the trade. So tomorrow, if we don't get a pop within the first 5 hours of market open, I'm Xing my position because for some reason, which we'll explain, that is one of the best ways to set this up for a trade. So if you want to see what the results would be by doing this over the past 4 years, you can see over here on your screen, tablet or data. It's going to show you NIO, which we're talking about, data analyzed 4 years. So we're looking at 4 years time, and you're going to see your net profit. Net profit is going to be how much money you would have made, what percentage you would have made if you would have taken this strategy. And you're going to see that the asset performance, it has only gone up 3%. So you would have made a 216% return by following the strategy on NIO in the past 4 years versus buy and hold for 4 years. You would have made 3%. Now, here's where things start to get interesting. You would have taken 231 positions in 4 years. Say 60 positions a year. That's only one trade a week. It's really not much. Now, let's look at your wins and losses. Wins, 42%. So you are losing much more than you are making money. Your losses are 58%. Your max drawdown is going to be 51%. But your average win is 5.38%, and your average loss is 2.23%. So what I want to do is show you guys here with these that at the end of the day, you don't have to be winning all of the time. You can lose most of the time, but if your RVR is there, it makes trading easy because you don't have to be right all the time. And let's see why, right? Because this could be something a lot of people can be like, I don't understand. How'd you make all this money, 220%, when Tesla dumped? And so what you're going to see here is the purple chart. This purple chart represents what our portfolio would be up compared to when we started. Versus the actual, you can see these green, gray, and yellow, or green, gray, and red line here. This is the actual price of the stock. So look what happens. Stock IPOs, if we would have followed this, up right here. And then we see a drop, and a continued drop, and a continued drop. And the stock at one point was down 75%. But our portfolio was only down 20%. So the reason for this, and I'm going to actually just isolate this beginning portion for you, but the reason that we didn't lose as much money as the stock did within this first year of IPO is because all of the gray areas that you can see highlighted here, all of the gray is positions that we are not in. And this is very important. I'm actually going to zoom in a little bit more so it's easier for you guys to see. So when we saw this big drop as soon as we ended up having this IPO, over here we saw this big drop, big fade, and you can see that our account sat still this whole time, even though the stock is trending down. And the reason for that is we're not in a position because from the time it IPO'd, we never got our trigger to entry. So you would have sat here from March of 2019 to May of 2019 and only taken 2 positions, which resulted in like a 1% gain which you'll see here, this little green, and then a loss, and then a small loss, and then a small gain. So the whole time that NIO's dropping, you're not in a position, or you're taking super small positions. All the gray here is just us not in a trade while the stock is taking a shit. And so look, right, as we continue to move, we're still not taking a ton of trades, This is August. So from August, the stock is down 86%, but our trading strategy is down 30% because we're not taking the major drops. We're trying to catch these uptrends, but it's not happening. And the thing I need you guys to understand with a bot like this or a trading style like this, you have to trade with the trend, because as you can see, NIO did nothing but just go straight down for a year nearly. But even with that being said, we didn't lose that much because we're only catching these small losses. Every loss we take is very small. But look at what happens. As we start to move to February and June of 2020, look at this, right? This is back when, during the pandemic, we saw, I think NIO was trading at $1.90, and this is when I entered. So look what happens. Our first major trade is May 26, 2020. We enter the position. The stock goes all the way up here. And look, you would not have been even, but because we caught this massive move, that's a huge hit to our portfolio in a good way. Then we didn't take a trade from June 12th to June 30th. We enter a trade and our account goes from being up 8% to within literally a month, we're up 139% because we caught this huge swing. Then what happens? We exit and we sit sideways and we barely trade for almost 7 months. Then we hit this big entry and then we get this push up. And so what you're seeing is that's why our losses are so high. Because what we're doing is entering and just setting a quick stop, seeing if we get the push. If we get the push, we're in it. If not, we exit. And so that's why you shouldn't care so much about your winning percentage, but more about your RVR, because we're just looking for big swings. And if that doesn't happen in the next day, then I'm out. But I want to share this with you guys. Definitely check out our Discord community. Definitely hit the like button, subscribe, and we'll do an update on this tomorrow. Peace.